Sylvia runs the Defiance Pure Electric Vehicle ETF, which just came out, what, in June?
In June, yeah.
Very auspicious since Tesla is up very big this year. So this is a very concentrated bet. I think this is exposure to just 5 companies. This is a big bet. Usually they're indexed that are much wider exposure. So this is a really concentrated bet on 5 companies. Essentially, you're dealing with Tesla, Lee, Rivian, and NIO, right?
Mm-hmm. Yes. Yes.
Tell us about.
And XPeng is the 5th.
Yeah.
So we
Tesla's about a quarter of this.
Yes.
There you go. There's the holdings.
Yeah. So it starts.
There's XPeng too.
Exactly. So it starts out as equal weight, and then it runs for a quarter and gets rebalanced quarterly. So Tesla tends to trump the whole thing. But what we did is we realized that investors are buying a lot of ETFs for electric vehicle exposure. But if you break down what is in those ETFs, because of the diversification rule, they hold stocks like Apple, Microsoft, NVIDIA.
Yeah, it's a mess.
Absolutely great stocks, but they're not electric vehicle stocks. And we thought to ourselves, well, it's better to be diversified than not, right? So instead of just buying Tesla, you want a little more exposure to the space. So we took the top 5 electric vehicle companies listed in the U.S. by market cap. So, why not 6? We looked at the ones that were sort of liquid enough, had strong market cap, and give investors pure exposure to that space.
And XPeng doesn't get much talked about.
Yeah, it doesn't. But these are, there's a lot of news recently that they invested in Didi, the smart car technology. Volkswagen gave them a big investment. It's a Chinese company, ADR, listed here. So yeah, you're getting the two world's largest economies. More than 60% of cars sold in China right now, new car sales, are electric vehicles. We know that number is picking up in the U.S. It's going to be roughly 18% globally, we think, which is nearly double from last year. We think that number is going to be about 30% in the next 5 to 10 years. So, why not, if you're interested in innovation and technology, think about this fast-growing space? And of course, we know the politics behind it, right? The infrastructure bill, tax credits, increase in charging stations, billions of dollars going to the classic auto retailers to redo their factories and build more electric vehicles for carbon neutrality and things like this. So we just think it's a phenomenal opportunity, and this would fit into the Schwab buy and hold, in our opinion.
Well, I like the concept of concentrated bets, and this is the Cathie Woods ideology, because if you're going to try to outperform, you have to make a concentrated bet. You can't mimic the S&P Technology Index. That's not going to work, because if that's going to be your benchmark, you're going to be in trouble.
Yes, and the good thing about this, though, this isn't one of those far out, we're waiting to see some spaceship flying in front of our home for you to generate a return, right? These cars are on the road and they're selling and they're delivering more and more cars. Yeah, absolutely.
I will go up and say, where have you been? And give me the keys. Take me with you.
Yeah, yeah. But, a lot of thematics get a bad rap for this world, this thing that is going to happen someday, hopefully in our lifetime. This is happening now. So,
no, it's definitely happening. And it's a great concentration. And it's interesting that you're dealing with essentially, 3 Chinese companies here?
Yes. Yes, and it can change. The ETF is structured so that it's the top 5 companies by market cap that generate 50% of revenues from EV. So if Lucid takes over, Li Auto or XPeng or NIO, then Lucid's number 3. So it's sort of an equitable allocation in an equal weight ETF.